Hi, and welcome to this chapter, Trends, Bullish, Bearish, or Range Bound. In other words, bulls means up, bears means down, and sideways means a range. So essentially we have a bullish trend, a bearish trend, and a range bound. Okay, so in these examples, let's first go through the bullish trend or an uptrend. When price action or candles moves in the formation of higher highs and higher lows. Tip: when trading a bull trend, only buy on a low or higher low. Bearish trend or downtrend: when price action or candles moves in the formation of lower lows and lower highs. Tip for when trading a downtrend: when trading a bear trend, only sell on a high or a lower high. Range bound: when price or candlesticks moves in box formation where price can't make highs or lows. Price seems to be confused or stuck, or what we call it a range. The tip for what we call for trading a range is to buy at the low of the range or sell at the high of the range. So for this, let's go to a more detailed example on a chart so you can actually see what we mean. So the first example is what we do is the uptrend. Okay, so this is the GBP USD on the daily, and you can see we're going to enter in our points. This is an uptrend, so this at the bottom would be considered a low. So we simply type here low, that's our low point. The next high point is up here. This is considered our high. So let's bring that over, let's edit that to high. Now the next one is called a retracement into a low, but is this low higher than that low? Yes, so that's called a higher low. So let's enter that there. It's a higher low. Then the next one we get up is the next wave up, and that is our higher high, because this high is higher than the previous high. So let's add that in. Higher high. Then we had a retracement down to this point. This is now considered another higher low. This over here is considered a new high, so is it higher than the previous high? Yes, it is. So that's considered a higher high. Is this retracement considered here a low, but is it higher than the previous low? Yes, so it's a higher low. These can obviously be abbreviated into what we call an L. We like to use this a lot easier, so we know what it means. L for low, and H for high. And this can obviously be HL for high low and HH for high high. So let's enter that quickly. So basically we'll have HL here, and we'll have a HH here, higher high. Now let's repeat that up and repeat that up. This is indicative of a uptrend because it's making a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low. This is perfect conditions for what we consider for trend trading. Okay, so then let's move on to onto a downtrend. So let's just remove all this off the chart quickly so we have all of it gone, so nothing's cluttered. So double click on all of it and delete. Now let's go give an example of a downtrend. So let's move over to the weekly where this is clearly in a downtrend, and we'll do the explanation of a downtrend. Now, a downtrend is where price makes a high. So let's just plot in our abbreviations to make it easier. A high. Next one would be a low. Next one would be a retracement into a lower high. Okay, a reason why it's a lower high It's a high, yes, but it's lower than the previous high. Yes, so it's a lower high. Then we get a move down into a lower low. Because did it go past this low? Yes, it did. So that is considered a lower low. Then we had a retracement into a high, but is that lower than the previous high? Yes, it is. So what is that? It is a lower low. It goes down. Then we got a move down all the way down to the bottom, and that is also another lower low. A retracement up into a lower high. So this is still in a downtrend. A very nice example of a downtrend that is yet to finish. So a very careful to plot your higher highs and higher lows, but it's very simply done by simply asking, is this high higher than the previous high? No. That means it's a lower high. Is this high previous to the higher high, the previous high? No. So that's a lower low. If it goes higher than this previous high, that means the trend is changing. This trend hasn't changed yet. Let me just show you a quick little trick that you add your trend line from the highs. You match all the highs and lows together roughly so they all meet. As you can see, this trend line touched. Messing with trend lines is more of a estimate, guesstimate type of game. You can fit it from point to point or tip to tip. It's still fine. So this would be indicative of a downtrend trend line, and this would be indicative of a uptrend trend line. Okay, but we'll get more into this a little bit later in the trend line of chapter. I just want to show you that for now. So as you can see, a downtrend example is a high, a low, lower high, lower low, a lower high, a lower low, and a lower high. Obviously, for a trend to reverse, we have to ideally see some sort of price action formation in candles, and then ideally we'd like to see a reversal in a due period of time. But until then, nothing yet. So let's go on to the last one, which was range bound. Now, range bound, as it says here, is when price moves in a box formation. When price can't make can't make highs or lows, price seems to be confused. We call it stuck in a range. Okay, as you mentioned, it's as if price is stuck in a box. So simply think of a box, and let's go to the charts. Find an example for you guys quickly here. Alright, let's take this off. Okay, to list off. Take that off as well. Okay, so you can see price looks more or less like it's stuck in a box here. Couldn't really get out, couldn't get up anyways. So this is what we considered our box. Something like that even, okay? Where price couldn't go low, it couldn't go high, it couldn't go low, it couldn't go high, it couldn't go low. Eventually it broke out the range though, okay? So it eventually broke out the range, that is fine. But this was a sequence of a low, a high, a low, a high, a low. It eventually did break out. But while it was stuck in that range, it could be tradable. It could be traded all the way down. So up and down, all along here. So that's a range bound trade. Where price fails to break above, it's almost what we call a resistance, support and resistance type of scenario here, or supply and demand. We're going to get into that in the next couple of chapters as well. Where price failed to break these lows, failed to break those highs, and it kept falling down. Okay, so but it couldn't fall through there, and then it rose up. So we'll get into what supply and demand is a little bit later in the course, but obviously this is what we call a range, where price is stuck between a certain area. Now obviously this can happen on any time frame. Particularly you can see it there, even it's boxed. This is sort of like a box there. As you can see, price was kind of stuck. That's a range, okay? Obviously most of the times indicative of a reversal, but sometimes it can be indicative of a trend continuation. So you just have to be patient and actually wait for the break to confirm, and then trade the break and retest, but we'll get into that a little bit later in the course. So with that is the end of this chapter of a bullish trend, as we give example on the daily and the weekly on the GBP USD with the downtrend, and this would be ideally a range. So with that you can continue to the next chapter.